Welcome back to this channel. Now take a good look at this beautiful trade that has already played out. Now I'll give you a quick analysis on how I entered for this beautiful trade. As you can see, it was like a quick scalp entry at this point, like 1:3 right here. All right, so before I give you a quick analysis, let me show you something at this point. Now anytime we have the market trending downward like this, giving us a lower low, a lower high, a lower low. Retail traders, take note of this. If you are trading like this, then you have to change your strategy. All right, you need to change to something better so you can be profitable in this 2025. All right, this is not 2022. You should not be trading with trend line or double top or double bottom. All these things are liquidity points. All right, because a lot of retail traders will be doing this. A lot of retail traders will be doing this, selling from this point. Anytime the market comes to the trend line, they will be selling this. The stop loss above somewhere there. Then not only once, they will also be entering anytime the price comes to their trend line. I don't know, they just love this trend line and they are stick to it even when they are getting stopped out. Then later you say that trading is a scam or whatever bullshit you are saying. When you are trading with this trend line, you are just making yourself to lose money in the market and you are saying what you are not supposed to be saying. All right, you better learn a good strategy or you won't stop losing. All right, now this is what they don't know. They don't know this, that the market will always do this. The market will always do something like this. Do you know why? Because there's a supply zone here. Because there's like a supply zone at this point. So now the market will come stopping all of you guys out at this point, collecting liquidity from you people to cause this huge move now. I don't know if you're understanding me. So this is what a lot of retail traders are passing through. So this supply zone now led to this breakup structure to the downside. And most times we always have fair value gap at all these points. So price will always come indicating them, sweeping all of you guys out. Now let's go to the recharts. Let me show you something quickly. All right, let me reanalyze this chart for you guys on how I entered, or the thought process on how I entered for this beautiful trade. Right, let me take this out. Let me take this out first of all. Take this out and this out right here. All right, and this out and this out. Now if you look at the higher time frame, if you look at the chart from the higher time frame, you see that the market is bearish. Okay, let me just leave these ones. Now look at the bearishness, a break of structure to the downside, another break of structure, and another break of structure right here. Now let's zoom in at this point. Let's zoom in. Now look at this. This was the breakout structure right here, right there. I don't know if you're understanding something now. A lower low. So we had a breakout structure here also. All right. Yeah, I have to make sure it's a straight line. So we had a breakout structure here also. Now remember something. As price is coming down from this supply zone, we are having a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Now let's mark out this lower low right here. because now price has broken structure to the downside. Now let's start marking our lower lows. So the lower low at this point here was the lower low, and here we had a break of structure at this point. Now this candlestick is not closing below this point, so I won't consider here as a lower low. All right, this is not a lower low, rather this is the recent lower low, and this is the recent lower high. So this was it at this point. Mark out this lower high also right here, and you have to make sure that the line is a straight line so you don't get things complicated, because if you did not make the line straight, you would think that this is a break of structure and you'll be waiting for some retracement so that you can trade the bullish trend, and sometimes this will just be just a liquidity sweep at this point and price will keep going down. All right, you need to see that clean break of structure, a candlestick closing above or below that whatever markets, whatever trend you are analyzing is either a downtrend or an uptrend. So at this point, I'm analyzing a shift of structure. So I need to see a candlestick closing above this supply zone here, this supply zone that led to this break of structure. I need to see a candlestick closing above it, which I did not have here. All right, I didn't see anything like that here, but I had something like that here. I don't know if you're saying this, I had something like that here. So this was the shift of structure and I waited for the retracement. Now this is what a lot of retail traders will be doing. A lot of retail traders, I don't know why you guys like doing this thing. This is not 2020, man. This is not 2020. You have to trade like you are in 2025. Trade like the elite. Trade like the top 1% and not the 99%. A lot of retail traders will be doing this, just like I said, drawing that trend line like this. I don't know why you guys love this trend line so much. And you guys will be trading something like this. You guys will be trading something like this. And so on and so forth, continuously, just to see yourself getting stopped out at this point. So you see, you don't have to be trading with this trend line or this double top or this double bottom tens. There's liquidity always at this point. All right, the smart money are monitoring you guys entering from all these points. I don't know what you guys are doing. They're monitoring you, so that's why you see that the market will start going to your direction, and then you see the markets taking you out before coming to your supposed direction. Most times you shouldn't be trading like this. You have no business trading this. I don't know how much you want me to explain this. This is a very bad way to trade. All right, I have done this before, no doubt. I've done it before when I was still learning how to trade. So I'm not saying you're a bad trader. I'm saying you just have to step up your game, learn new things. All right, upgrade. I don't know if you're getting me. So don't do this like I said, rather do this just like I'm analyzing at this point. All right, so like we had here, first of all, we look up, we see that there's like an unmedicated fair value gap at this point. And also if you zoom in, see that there's like an order block at this point, a refined order block at this point. All right, so draw that out, or I took that out because I did all these things while I was looking for the opportunity, or when I was analyzing the chart then. So after I had that shift of structure and the retracements, now a lot of you guys will be expecting price to pull back to somewhere here. Now look at this. This fair value gap has been covered. Like I have always been saying, 50% of the fair value gap is enough for price to retrace to, and which price has done here. Price has already retraced to 50% of this fair value gap. So I have no business waiting for something here or waiting for the market to come to that point. And also there's like a liquidity sweep at this point. There's like a liquidity sweep right here. So I have no business waiting for price to come sweeping liquidity again because I already had the liquidity sweep. Alright, so I had that break of structure, sorry, that shift of structure and a retracement. So I entered immediately. I saw this three engulfing candlestick, which some people do call three white angels. Alright, I entered at this point, and this was it. My stop loss below this point, and as you can see, played out perfectly well. And my take profit was right somewhere here, just like this. And you can see played out perfectly well. Now I'm still waiting for something right here. I'm still waiting for something because price has mitigated this. Resuming, price is retracing to mitigate this supply zone here. First of all, there's a supply zone here which I have drawn out. Second of all, there's also a supply zone here. So like I've always said, you don't predict the market, react to the market. All right, react to the market. And also at this point, there's like an overall supply zone there also. So price can retrace from anyone it chooses. It's just for you to react to what the market is giving you. All right, price can retrace from anyone. All right, so let me show you what I'm doing. Look at this. Price has mitigated this first supply zone we had here, because if you think about it, there's like a fair value gap here, which price has mitigated. Price has mitigated this fair value gap here. Now this one was mitigated a little bit, and price has come filling it up at this point. Price has filled it up right here. So now I'm having a break of structure, or sorry, a shift of structure also. Remember, the higher time frame is still bearish, so this is like a shift of structure again. And now it's late. Now I can't trade. Now I can't trade. So if you take out your premium and discount also, you see that the market has gotten to our premium, but I'm not taking the trade yet because it's late. Now I have my own trading rules. I don't trade at this time. It's late now. I don't take trade at this time. So definitely when I come checking the markets by tomorrow morning, I'll be seeing some liquidity sweep because there's liquidity above this point. There's liquidity at this swing high here. So obviously I'll be seeing something like this. Yeah. If I didn't see anything like this, then I'm not trading. I'm not trading this. That means price will still keep going up regardless of this shift of structure. So don't impose your thoughts into the market thinking that immediately we have had this shift of structure that price must go bearish because we had a shift of structure. Price can just shift structure just to mitigate this fair value gap here. I don't know if you are seeing this fair value gap here. Price can shift structure to cover this fair value gap here. So don't impose your thought thinking that since price has shifted structure, then we are going to go bearish or continue going bearish. Don't think that way. If you think that way, you are going to lose your hard-earned money. You have to react to the market. Wait for that shift of structure at this point on the lower time frame also before you trade. Alright, don't enter randomly. Alright, and note this, anytime you have a swing high, there's always liquidity above that point. So if you are entering for this trade like this, you should put like a nice stop loss. Don't make your stop loss so tight. You can see this point. Put your stop loss way above it because price can come sweeping liquidity above this high here, like I said. Because I know definitely that there is liquidity above this high, this swing high here. Alright, so put your stop loss at a significant point anytime you are taking a trade like this. Don't tighten your stop loss, put it at a significant point. Alright, I hope you have learned something from this video, and I hope you can analyze your charts better sometimes and not using your trend line or your double top or your double bottom to trade, because you will always get stopped out and you can never be profitable I don't know if some people do make money using this double top or double bottom, but I don't think people do make money using them. They are more getting stopped out than the way they are making money. Believe so. Alright? So don't do this. Let me give you guys advice on the psychological parts of trading. Alright? Congratulations if you have watched me till this point, then congratulations to you. Alright? Now, I want to tell you guys something. Anytime you come facing your charts and you are having all these emotional thoughts, think about it. It's because of your past trading experience. Most times it's because of your past trading experience, because I see no reason why you'll be afraid to take that beautiful trade after you have done all the analysis you need to do. You have set everything is ready, and you are scared of entering for the trade. It's goddamn because of your past trading experience. So I want you guys to do me a favor, or do yourself a favor. Erase all those thoughts from your mind. They're going to kill your trading journey. They're going to kill it for you. They're going to destroy your trading journey, because trading is 80% psychological. All right, 80% psychological. You have to erase your thoughts you have been having about the markets, your thoughts about the markets, your thoughts on how you got stopped out 10 times or 5 times the last time you tried to trade. And even if you are seeing that same setup that got you stopped out, look out for what made you miss that trade, or why price takes you out before coming to your direction. Look out for what you did wrong. That's why I said that reviewing your trade after trading is very important. All right, not just enter for the trade. When you are done trading, what do you do when you are done trading? You review the trade. If it's a profitable trade, or if you made money from the trade, then you review it. You see what you did right and try to repeat it. If it is a loss, don't be too emotional. You're a forex trader, for crying out loud. Don't be too emotional. Anytime you take a loss, look out for what you did wrong. Look out for what you did wrong and make sure you do not repeat that thing again. Alright? Most times getting liquidated by the market. And most of the experience that everyone is having is that price will take you out before going to your supposed direction. So anytime you see something like this, you know that price will definitely go to your direction after taking you out. Then you enter for the trade again. It's normal. Anybody can get stopped out in the market. Even your trading guru or your trading mentor can also get stopped out. So anytime you get liquidated and you see something like this, let me give you a quick example. Maybe you see something like this. Let me see, like this, yeah. And you enter for the trade from this point. Yeah, like this. All right, let's say you are doing something like this, and your stop loss is right above this high. Now price did something like this, taking you out, and you see that. Let me show you something, or let's zoom in first. And you see that a candlestick, and you see that a candlestick is not closing above this point here. It's just the candle wick that stopped you out. Enter for the trade again, because this market is going to go bearish. This market will go bearish. Enter for the trade again. Anytime you had something like this, because I have had this experience multiple times. That's what I'm saying. I do have this experience multiple times. A lot of times prices take me out like this and then go to my supposed direction. So anytime you have something like this, just know that this is just a liquidity sweep and not a shift of structure or a break of structure. Price will still go bearish because it's just the wick that is closing above this point that stopped you out. Alright, that's why I said that There is external liquidity is at swing low and swing high. So here is the swing high which price took out here. So this is a liquidity sweep and you have no problem with that. So when you get stopped out, enter for the trade again. Unless maybe you see a candlestick closing above this swing high at this point, a candlestick closing above, then we will call that a break of structure to the upside, then the market is still bullish. But if it's the candle weak, closing below, closing below or above, depending the trend that you are trading, then continue, enter for the trade again. Don't be too emotional. This is what I'm saying. Don't be too emotional. You're a forex trader. Anytime you get stopped out like this, enter for the trade again. Right? Just know what you are doing. That's just it. Just know what you are doing and not, I'm sorry, don't be emotional. I'm sorry to say this. You can't be acting emotional or feeling depressed just because you had just one loss. Take it again, enter for the trade again, and the next one might be a win or a loss. All right. If it's a loss, then you check out for what you did wrong and make it right. Then if it's a win, you try to repeat the process again and again, and this is how you become profitable. Like I said, you won't stop losing. It's only your risk management that is going to make you profitable and not the money you are risking or anything, or how much trade you are taking in a day. That's not going to make you profitable in the long run. You are just gambling. So just take it step by step, one after the other, and apply a good risk management. Don't be too greedy. Work on your emotions, work on your patience. Most importantly, work on your patience. So there's how you will see something like this in the market and you just wait for price to take out this liquidity above this point before you enter. That requires a lot of patience for you to wait for this move. Then you take the big move and trade it bearish. It takes a lot of patience. You have to be patient enough to wait for this. All right. Most times the London session has opened, but price has not given you what you want yet. You will still be waiting. That's it. Or that's all about trading. Patience. All right. So these are the things that will make you profitable. Psychologically, you need it 80% at least. Trading is 80% psychological. So please work on yourself mentally and not just learning strategies from strategies to strategies. Any strategy you have without the right psychology, you just blow that account and just misuse that strategy, and then you switch to another strategy thinking that is the strategy. You have to work on yourself. All strategy cannot be wrong. If all strategies are wrong, then you are the one who is wrong. So work on yourself. All right, and stop blaming the market, because you can't blame the markets. You have to take full responsibilities of your trade. Each and every trade that you place, take full responsibilities of them and not blame the market over nothing. So just blame yourself because you know nothing about the market. So go study more and work on yourself psychological and technically. All right, so this is what I have for you guys, and I hope you guys have gain something from this video. And also like and subscribe so that you can get a lot of content like this about trading, so that you can understand more about forex trading and build yourself gradually. All right, and happy trading day and happy trading week.